Hi everyone, we're from Group 2 and this time we want to present about PPH article number 4 ayat 2.
Alright, so each person will continue their own part. Bye bye. Bye guys.
So I will explain first about PPH Article 4 number 2. So income tax Article 4 paragraph 2 is a provision under the Indonesian income tax law that regulates certain types of income subject to final income tax. This means the tax withheld directly and it's not combined with other income in the calculation of annual income tax return. So the characteristic of PPH Article 4 number 2 is the tax rate is fixed or specific and it is imposed on gross income, not net profit, and once withheld, it is not included again in annual tax return or SPT because it is considered as final.
Okay, I will explain about type of income subject to final tax. So there are different type of income that are subject to final tax in Indonesia. This means that once the tax is paid, it is considered final. So there's no need to recalculate it in the annual tax return. And I will explain through each category. Number 1 is interest on deposit, saving, and SBI discount. These are taxed at a final rate of 20% according to Artikel 4 nomor 2 and PMK 136 PMK nomor 3 tahun 2009. Number 2 is prize winning such as from lotteries or raffles are subjected to final tax of 25% based on the government regulation number 34 of 2000. And number 3 is rental income from land or buildings is taxed at a final rate of 10%. As stated in government regulation number 34 of 2017. And number 4 is transfer or right over land and buildings, such as when selling property incurs a 2.5% final tax under government regulation number 34 or of 2016. And number 5 is construction services are taxed between 2 and 6%. It depends on the type of service and the qualification. This is based on the government regulation number 51 and 2008 and number 40 of 2009. Number 6 is income from MSMEs earning up to 4.8 billion rupiah per year. Gets a very low final tax rate of 0.5% under government regulation number 23 of 2018. However, this is only valid for a limited time. And number 7 is dividend from domestic companies can also be subjected to final tax or not depending on specific condition. So the details are covered under the income tax law and relevant PMK regulation. So the system is designed to simplify tax compliance for both the taxpayer and the government, especially for income types that are easier to monitor of the source.
Next, we are talking about the simple example of lottery taxations in Indonesia. Let's say Mr. Budi wins a lottery prize worth 100 million rupiah. According to Indonesian tax rule, the first one, the lottery prize are subject to a final tax of 25%. So the final tax Mr. Budi has to pay is 25% times 100 million rupiah is equal 25 million rupiah. This means Mr. Budi only received the remaining amount, 100 million rupiah, minus 25 million rupiah is equal 75 million rupiah. Since this tax is final, Mr. Budi does not need to report the income again in his annual income tax return. It's already full taxed.
So next up, I will be explaining about the purpose of the PPH 4 number 2. So first of all, it aims to encourage investment and also saving by offering simpler or lower tax rate. So the government hopes to motivate both individuals and also business to invest and save more. And then the second one is it helps to simplify tax collection, because this makes things easier not only for the taxpayers but also for the tax authorities by reducing paperwork and also administrative process. And then the third one, it works to ensure tax equality because the PPH 4 number 2 applies the same tax treatment for similar types of income, which helps to create a fair tax system. And then lastly, it's designed to consider economic condition. This means it can adjust to what's happening in the economy and financial world, helping to maintain stability and also growth. So that's a quick overview of the purpose of the PPH 4 number 2, and the next will be explained by my friend.
So the case discussion question is that Mr. Andi owns a small shop house in Jakarta. He rents out the property to open a bakery business for 15 million per month. The rental contract started in January 2025 and runs for 1 year, which is 12 months. Under PPH Article 4, to rental income from land and or building is subjected to final income tax.
Alright, so here I'll try to answer that question that my friend had mentioned before. So the applicable regulation, according to PP number 34, 2017, the final income tax on rental of land and or building is 10% of the gross rental income. As of now, the rate is still 10% unless updated by any regulations. So the income calculation will be monthly rent, which is 15 million rupiah, and the annual rent of 12 months, which means 15 million times 12 will be 180 million. So the PPH final calculation, Article 4, number 2, will be tax rate, which is 10%, and final tax due annual will be 10% times 180 million. The answer will be 18 million rupiah. So the tax payment, Mr. Andi must pay 18 million rupiah as final income tax in relation to his rental income. This tax is paid regardless of any expenses incurred, for example like maintenance, repairs, and etc. as PPH finals is calculated on gross income. And the tax reporting will be Mr. Andi does not need to include this income in his annual tax return SPT tahunan under regulation income. Since it's subject to final tax, however, he still must report it in the final income tax section of the SPT.
So we are move on to the conclusion about PPH Pasal 4 Ayat 2. And PPH Pasal 4 Ayat 2 is a final income tax applied to specific types of income in Indonesia. It uses fixed rates and is not creditable against other income taxes. This regulation simplifies tax compliance, especially for small businesses and certain transactions like rent, interest, prices, construction services, and property transfers. Because it is final, taxpayers are not required to include the income in their annual tax returns calculations. However, they must ensure correct classification and timely payment to avoid penalties.